Top three things this morning in my notebook. Number one, the Russell 2000. Number two, Japan. And number three, the 10-year bond yield here in the U.S. The first point in the Russell 2000 would be that, looky here, you have an all-time high in the Russell 2000 yesterday. And again, that was with the S&P 500 down. So that's what you would call a bullish divergence for the Russell. The Russell is up 4.2% for the year to date, whereas the S&P 500 is up 1.5%. So again, it's outperforming not only yesterday, but for the year to date. And of course, the Russell's at its all-time high, whereas the S&P is down 1.3% from its all-time high. And again, the simple call that we continue to make is that you'd rather be long the Russell than the S&P 500 because a Russell is a much better way to own strong dollar in U.S. domestic economy as opposed to the S&P 500, which is littered with international currency risk. Point number two is Japan. Last night, you obviously saw the Nikkei go up with the yen go down. Kuroda was speaking, the overlord from Japan he is. And again, the overlord said, we will come up with more innovative monetary policy. Innovative monetary policy. Now, how you innovate beyond 80 to 90 trillion yen is beyond me, but I think that means that he is going to go over 100 trillion yens. Again, that is QQE meeting set up for April. We don't know what the number is going to be, but I assume that being innovative is just printing more. And again, that's down for the yen, that's up for the Nikkei. The Nikkei registers a new year-to-date and 15-year high of 19,560, up 12.2% for the year-to-date, trouncing the S&P 500 again by a wide margin. Then finally, bond yields. Been a great week, been a great 15 months, been a great year actually to be long the long bond. Don't forget that the TLT fully loaded is up over 4% for the year to date, whereas the S&P, as I pointed out, is up 1.5%. So if you're long the long bond, you're quite happy, and you have been quite happy. And again, the 10-year bond yields next support level is 191, and then after that you have no support to 168. So again, what is the catalyst? The catalyst, my friends, is the data. The data will be deflationary, and again, as deflationary data rolls out, now Janet has been in print and on the tube saying I am data dependent. So let's wait for that data, dear Janet, and thank you very much for our returns on the long side of the long bond. And those are my top three things.